a brand new episode, and we're going to talk about some of the biggest news that came out today. So I came across this article on CNBC. Coinbase lays off 18% of the workforce as executives prepare for recession and crypto winter. So let's check out this article and see what it says about laying off 18% of the workforce, and if you believe that there's going to be a recession. So let's go down. So Coinbase is laying off almost a fifth of its workforce amid a collapse in its stock and crypto prices. The cryptocurrency exchange will cut 18% of full-time jobs, according to an email sent to employees Tuesday morning. Coinbase has roughly 5,000 full-time workers, translation to a headcount reduction of 1,100 people. So it's showing that, especially right now in these current times, that a lot of these cryptocurrency exchanges are getting hit hard, and Coinbase is just another one of them. So they're going to be laying off 1,100 people, and that's not only going to affect Coinbase itself, but it's going to affect that 1,100 people's lives, because now they're going to be looking for jobs, and this sector of cryptocurrency is just getting hit pretty tough right now. So the shares of Coinbase closed down 0.83%, which is not that bad for the day. So CEO Brian Armstrong pointed to a possible recession and a need to manage Coinbase burn rate and increase efficiency. He also said the company grew too quickly during a bull market, and I believe they are not the only one that grew too quickly, because a lot of these crypto exchanges were doing massive hiring. And because of this economic downturn that it looks like it's inevitable, a lot of these exchanges like Coinbase just have to lay people off. So hopefully this is just the beginning, but it ain't looking too great. So we appear to be entering a recession after a 10-year plus economic boom. A recession could lead to another crypto winter and could last for an extended period, Armstrong said in the email, adding that past crypto winters have resulted in a significant decline in trading activity. While it's hard to predict the economy or the markets, we always plan for the worst so we can operate the business during any environment. All right, so it says right here, Coinbase had initially said it was pausing hiring. 2 weeks later, the crypto giant announced that it was extending the freeze for the foreseeable future. Earlier this year, Coinbase said it planned to add 2,000 jobs across product, engineering, and design. Our employee costs are too high to effectively manage this uncertain market, Armstrong said. While we tried our best to get this just right, in this case, it's now clear to me that we overhired. And yeah, and you're not the only one. You know, I think this whole what will look so great for a long time, a lot of these people started selling off their crypto once the economy started turning, and right now it's hitting everybody. It's literally everything is tanking, and it's just a sad snowball effect that's going to continue. So Coinbase shares are down 79% of this year, 85% from the all-time high. My Lord, 79% this year it is down, and we're only halfway through the year. So let me know in the comments below. This is Money Moves. Do you believe Coinbase is actually going to be tanking more? Let me know in the comments below. And also, please like and subscribe. Share this video if you find it informative. Meanwhile, Bitcoin has dropped to a near 22,000 and has lost 53% of its value this year. So Bitcoin, the juggernaut, the shining star of the crypto world, has lost 53% of its value this year. And many people are saying, buy the dip, buy the dip. But I think a lot of these investors who were just investing into crypto because it kept rising are they don't have these diamond hands, and they are selling off. And the more and more people sell off, the price is just dropping. And I think what's being held right now is by all the people who are firm believers of Bitcoin, and it ain't looking too great. So San Francisco-based Coinbase reported a slump in users in its last quarter and a 27% decline in revenue from a year ago. The company gets the majority of its top line from transaction fees, which are closely tied to trading activities. So, for those that didn't know, these exchanges get their revenue from transaction fees. So, if over a quarter of their transactions have dropped already, that they're losing 27% of their revenue. So then they're gonna have to find ways to still be profitable. And the first thing that goes, which is the biggest overhead cost, is employees. So that's what they're doing. They're cutting these employees. So the rest of the article just has other opinions that they're stating. And this other highlighted section says Coinbase joins dozens of other tech and crypto companies slamming the brakes on hiring. Crypto lender BlockFi said Monday it was cutting 20% of its employees. So Coinbase 18%, BlockFi 20%. Open source transaction layoffs. FYI estimates that more than 5,500 startup and tech jobs have been cut in June alone. Woo! It's going to be tough times, man. And it is not looking great. So BlockFi and Coinbase are 18 and 20% employee loss, man. So let me know in the comments below. Tell me what you guys think. Please like and subscribe. This is Money Moves. Just trying to bring forth some attention to some of the biggest articles that I come across. So here's another great ender quote right here. We think anyone who makes an investment, whether they're an employee or investor, will have a handsome return over the long term. Choi said, Coinbase is a long-term play. We have very deep conviction in the long-term value of the stock. So, yeah, we'll see about that. So, let me know in the comments below, if you think Coinbase will last, it's not looking great. And, it's a sad day for all those employees that got laid off. These are people who, they're just trying to pay their bills and they're just getting laid off. And this is not only going to be the only sector that gets hit. So, in the next article I want to bring to your attention is on Cointelegraph. So it is EU Commissioner reiterates need for regulating all crypto assets. So here we go again with the government in the European Union trying to regulate all crypto assets. So let me know in the comments below. Are you a believer in regulating? Are you anti-regulations? Because some people believe once the government starts regulating it, then the average investor will then get in it knowing that it's quote unquote safer. And there's many people who turned to crypto because it wasn't regulated and it was supposed to be for the people, by the people, and a decentralized a form of currency. And so let's read what the EU person is saying. So Mayreed McGuinness, probably botched the first name, but whatever. The Commissioner for Financial Services, Financial Stability, and Capital Markets Union at the European Commission is moving forward with a discussion on regulating cryptocurrencies amid three major events in the space. In written remarks for a speech in Brussels on Tuesday, McGuinness said the Celsius network's recent suspension of withdrawals, as well as the crash of Terra, originally Luna and now Luna Classic and LUNC, show the need for crypto asset regulations in the European Union. She added that ongoing concerns about crypto potentially being used to circumvent sanctions on Russia were also a factor. So here we go, trying to tie Russia into it. They're not the only ones trying to circumvent their sanctions. Ukraine was also taking money of donations for the war in crypto. So let's not act that Russia is the only one involved over there in that war. It's also Ukraine. So crypto is being used in a multifaceted ways by other countries. So they're just trying to get political on that. So regulating all crypto assets, whether they're unbacked crypto assets or so-called stablecoin and crypto asset service providers, is necessary, said McGuinness. Sanctions implementation could be facilitated if our framework on crypto was in place, and if all crypto asset service providers were regulated entities and subject to effective supervision of the European Union. Yeah. So, like nothing ever happened when the stock market hits, and or when the real estate bubble pops and stuff like that. And just because the government is involved, they believe that it's all of a sudden now going to be a safe haven and going to be protected from any type of craziness that just happens when it deals with any type of asset. So that's just my 2 cents. So let me know in the comments below, what do you think about this, what the EU is saying about regulations? Leave a comment below, like and subscribe, share this video if you find it informative. The EU Commissioner added that she planned to discuss political compromise under the French government through the market in crypto assets, or MiCA, proposed currently being reviewed by the European Parliament, the European Commission, and the European Council. MiCA rules will be right tool to address the concerns of consumer protection, market integrity, and financial stability. This is something that is so urgent given recent developments, all right? And under the MiCA draft proposal, all crypto firms providing services within the European Union will likely be subject to the same rules. Initially, the measure was delayed due to concerns about a potential ban of proof of work cryptocurrencies, but went out of committee in March. And right here, in addition to its own regulating digital assets within the EU, the Commission on Thursday closed a consultation launched in April for financial services specialists to weigh in on potential rollout of a central bank digital currency. McGuinness said in May the EU was stand ready to introduce legislation behind the digital euro. So of course they want to take out crypto as a digital currency, and then they want to bring in their own digital euro. So it's multifaceted when it comes to the government on what their agenda really is. So I think that bottom line really says it all right here. McGuinness said May that EU Commission will stand ready to introduce legislation behind a digital euro. So it's not only them, but also in America that they want to have a digital dollar. So I think this thing is going to go global. Maybe they're trying to take out cryptos and trying to display to the world that it's somehow unstable, like many other things in the world that's very unstable. So yeah, let me know what you guys think. This is Money Moves. This is a brand new episode. Like, subscribe, share, and follow. Thank you. Have a good one. Peace.